Hello friends, welcome to A to Z Learning channel. Today's video is part of our company analysis series. In today's company analysis series, we will be analyzing HDFC Mutual Fund, which is also known as HDFC Asset Management Company Limited for you. Today's video has got three sections. The first part, we will look at the mutual fund as an industry and provide you all the information that you should know. In the second part, we'll go deeper and look at HDFC Mutual Fund as a company and share all the key facts that you should know about this company before investing it. And the third and the final section will pick up what is next in the store for this company and the industry. What is the outlook of this company? Should you stay invested? Should you come out? Should you invest more? All those aspects will pick up in the final section. So it's going to be very important video if you're interested in mutual fund as an industry or as HDFC mutual fund as a company. What do we want from you? We want a little bit help from you. First of all, we want your full attention. So please be with us for the entire duration of this video. And if you like the content that we are sharing with you, please do provide us lots of lots of comments. And at the same time, if you have any suggestion about our content, that also please share that with us through comments. It's very important for us to have an engaged audience because we are in the business of simplifying the complex. So if our content, our delivery is not making sense for you as a viewer, then we are not doing our job. So please do keep comments coming in, and if you've not subscribed our channel A to Z Learning as yet, I would urge you guys to please subscribe so that our partnership, our viewer base continue to expand and we continue to improve quality of our content that is meant for you guys. So without any further delay, let's start the video. So as I said, the first section is focused on the mutual fund as an industry. Mutual fund industry is relatively speaking new. Its mass penetration is still at a low level. I would say this industry has got some attraction, some attention in last 15 years, though there has been companies which have been in existence for number of years, like UTI, which is one of the oldest mutual fund company in India, but that was never seen as a mutual fund industry by the masses. The individual investors, people like you and me, have started to get attracted to this industry only, I would say, in last 10-15 years. Right now, the industry is working really hard to kind of penetrate more, expand more its reach. They run this campaign, which is called Mutual Fund Sahi Hai. Most of the famous cricketers, film stars, kind of are part of that advertisement campaign that they are running. So there's a lot of focus to really expand and grow this industry called mutual fund industry. So what happens in this industry? This industry, in a way, simply collects the money from its customers, and collected money then is invested in the individual stock, and hopefully the invested money will be far bigger than the amount that was first invested, and that return will be shared with the customers who have given the money. How do they make money? How does this industry make money? So when you give the money as an investor to mutual fund industry, they keep a percentage of that money as their revenue. They meet all their expenses through that share that they get from your money, and run their business. But the money, rest of the money is kind of invested in the individual stock, and it remains safe. So, and you have the option to exit whenever you want to exit. They do claim that you should stay invested for a long period if you really want to kind of capitalize the best return from this industry. So it's a very interesting industry model. I think one very unique thing about this industry is that they don't have the challenge of going after their customer to recover their revenue. Most other industries, they sell their stuff and then they chase their customers to get their money so that their revenue is realized in cash. Whereas in the mutual fund industry, whatever money is given by the customer, they first retain their revenue portion, and only the remainder is invested in the market. So it's a very interesting model uh, as an industry, and they don't have the challenge of managing their account receivables. Okay, so let's go deeper in terms of understanding the industry. So the biggest kind of benchmark, the most important benchmark for this industry is what are the assets that are under management. It's called AUM, assets under management. As of now, mutual fund industry in India has got roughly about 28 trillion rupees as assets under management, which if I convert into US dollar term, it's about 375 billion US dollars. So it's a sizable asset, but it's not as big as one would see in some of the developed economy. US is the mother of this industry. This idea, this industry was born in the US. It was a brainchild of the US, and it grew and then got exported to other part of the world over time. In the US, individual companies may have assets under management which are US dollar 2 trillion, 3 trillion. So it's a much, much bigger industry there in the US. So India is also kind of in the right path. It has got, as I said, 375 billion US dollar assets under management, and it's growing very, very fast. Largely speaking, the collected money, these assets are then invested in the individual stock or bonds. So basically, there are two type of assets in which they invest: the equity assets, which are the shares of the individual companies, or the non-equity assets, where the bonds start to kind of come into play. So roughly speaking, one third of the total assets are invested in the equity, and the balance two-third is in the non-equity assets for mutual fund industry. As I said, that it's a very fast growing industry. In last 5 years, it has doubled. If I look at last 10 years of this industry, they have grown 4 times. So it's a very, very fast growing industry. It has got almost 94 million customers. If we take the number of accounts as a proxy to the customer, then 94 million customers are there. So overall, very, very rapidly growing industry, has offered some attractive return, has really brought number of individual investor to the share market without having that stress of picking up stock directly. Now let's talk about the second section, which is uh, about the company, HDFC Mutual Fund, HDFC Asset Management Company as a whole. So first of all, who are the promoters of this company? So this company was promoted by HDFC Limited, which is in the business of home loan, as you know. It is also the holding company of HDFC Bank. HDFC AMC is also owned by HDFC Limited. Then the second main promoter of the company is Standard Life, which is worldwide known for their mutual fund expertise and the insurance business. They own roughly about 25% of this company. The good part is that their promoters are so cash rich that they have absolutely nothing pledged to leverage. So that's a very, very positive news. So promoters are fully committed and they don't have any cash constraint to kind of continue to invest in this company. Company has got assets under management which are roughly 3.5 billion rupees, or just about 47 million US dollar. It has got about 23 equity schemes and 90 debt scheme, because bulk of the money is still kind of invested in India in the debt. So every asset management company has got more debt scheme than the equity scheme. But as an individual investor, uh, most people prefer equity investment than the debt investment. HDFC is the largest market shareholder in terms of AUMs from individual investor. They stand at about 13% at the end of September, which was 15% in March 2020. So their market share has reduced slightly in last 6 months, which is not a great news for the company. It is the most profitable company in this industry, and if you look at since their listing, they were listed back in August 2018. So they have been a market listed company for little over 2 years, and they have delivered amazing return. Their annual return has been 43%, which is amazing. And their peer comparison, and I've picked up the peer comparison for the other listed companies, so Bajaj Finserv, Chola Mandalam, and Muthoot Finance, as the numbers say on your screen. The market cap wise, they are the second largest mutual fund company in India. And in terms of return on assets, they are the number one. And I think that's a kind of clear reflection that they are the most profitable company in the mutual fund industry. So their return on assets stand at about 33.6%, which compared to Bajaj Finserv, which is just under 20%, and Chola Mandalam and Muthoot is more like less, just under 7%. So it's a highly profitable company. Now let's look at the kind of meat of the matter, where we look at what is in the store for the future, what is the outlook of this company, because that's where kind of sort of we say that rubber meets the road. That's what matters for you as a shareholder who's already invested in this company or who's looking to invest in this company. So this is the most important section of the information that we are sharing today. So first of all, let's kind of do a recap. The company has lost its market share recently, but it is bringing some new investment strategies to regain that lost ground. And it's very clear that the growing market share is the key focus area for the company. So that's very, very important to keep in mind. So from an outlook perspective, they'll continue to bring new product, new investment strategies to make sure that they continue to grow their market share in India. Industry is expected to have weak inflows, means the new money that is coming in from the individual investor or institutional investor is going to be weak. As we have seen in the trends since lockdown, the monthly inflow is a lot less than what it used to be before COVID situation. And I think that's fair because employment uncertainty is at peak. Lots of people have seen pay cuts. Lots of people are making sure that they keep some cash balance for that rainy day, for that health need in case they lose the job. They have to have continuity of availability of money to meet their expenses, day-to-day expenses. So sort of investment part has taken a slight backseat, as I'm seeing in the India market. So they are impacted by this as well. So HDFC AMC is also seeing the weak inflows, but I'm hopeful from a future perspective, from an outlook perspective, as they are looking at launching new product. They are diversifying their investment style and trying to kind of move into the solution space, rather letting an individual customer choose the individual fund for investment. They are saying that, okay, if your objective is to kind of have a saving of X amount after 3, 5, 10 years, then they will construct a product for you so that you get that saving at the end of that 3, 5, 7, 10-year period that you have set for yourself. So I think those sort of things are steps in the right direction in my view. That gives me a lot of confidence about the future of this company. And then the third part, which is very, very important from a future outlook perspective, is the expense level. This company has been amazing in terms of keeping their expenses in check. They, as I said earlier, they are the lowest cost operator in the industry. That's the reason they are most profitable company in the industry. So they have the ability to take some shock without having a huge disturbance to their business, without having a huge doubt or loss of confidence in the company from an investment perspective. So it's very, very important that their lowest cost operator uh, perspective, lowest cost operator position in the market will set them for a very rapid growth in the future. So keeping in mind basically these three key data points, from an outlook perspective, I would say that I remain bullish on this stock. If you're already invested, then I have a strong, I guess, recommendation for you guys, strong suggestion for you guys to keep it hold. If you are looking to invest, look for the dip to kind of buy this stock and dip, because this company has the potential to deliver some amazing return in the future as well. You will see some, I guess, bottlenecks along the way, but from a long-term perspective, this remains a good company to stay invested in. So overall, my recommendation is hold and accumulate if you see dips in their share prices. So I hope that you found this information very simple to understand, very simple to grasp, and this has helped you to make the decision that you have to make about investing in mutual fund industry or investing in HDFC Asset Management as a company. Please do provide us your comment. Those are very, very important for us to know whether our content has hit the mark, whether that was fit for purpose, or you have any suggestion. That's your comments is the only way for us to know where we are missing something really important, where we need to improve our content. And last but not least, I would say that if you're not subscribed to our channel, please do subscribe and become part of our community so that we continue to progress towards simplifying the complex world of finance and investment. Thank you very much for watching. Good luck with your investment decisions. Thank you.